Good morning, everyone, and welcome to today's session. I'm Dr. Sheila Bijalwan, Assistant Professor at the School of Management Study, Swami Rama Himalayan University. In today's lecture, we are going to explore the most important topic, that is commercial bank and its type. Commercial banks play a vital role in the economic development of our country. Now we will going to explain about the introduction of commercial bank in India. Commercial banks are key pillar of the financial system in India. They accept deposit from the public and offer loans and advances to individual, business and the government. Their operations are governed under the Banking Regulation Act 1949 and regulated by the Reserve Bank of India, that is RBI. Examples of commercial bank are well-known HDFC Bank, which accepts saving deposit from customer and offer personal loans. Now we will explain about the objective of the commercial banks in India. Commercial banks operate with multiple objective aims at balancing profitability with economic and social responsibility. That is, the main objective of commercial bank are profit maximization. Like any business enterprise, banks aim to generate profit for shareholder. Profit come from interest on loan, investment return and service charges by the bank from their customer. Secondly, it safeguards public deposit. It maintains the trust of depositor by ensuring safety and liquidity of funds. It follows strict regulatory norms set by the RBI to protect depositor interest. Third objective of the commercial banks are promoting economic development. It provides credit to critical sectors like agriculture, infrastructure and MSME sector. It supports national development goals through financial assistance and investment. Next, efficient allocation of resources is the another objective of commercial bank. It allocates funds to sector with the highest productivity and social impact, avoid concentration of credit in a few industries or businesses. Next, it encourages saving habits, motivate people to save by offering various deposit products with attractive return. The another objective of commercial banks is liquidity and payment services. It facilitates a smooth transaction in the economic through payment system, provide instruments like chase, demand draft, credit debit card and UPI. Next is supports government initiative, partners with the government to execute the various policies developed by the Government of India and distribute subsidies to the customer. It provides stability and soundness of the financial system, maintain financial discipline and follow RBI guidelines. It contributes towards the overall health and trust in the banking sector and banking ecosystem of our country. Example of these are banks playing a role in Atmanirbhar Bharat by providing working capital loans to small and medium enterprise during COVID-19. Now we will explain about the history and evaluation of commercial banking system in India. The development of commercial banking system in India can be broadly categorized into two phases. These phases are number first, pre-independence and post-independence. During the pre-independence era, the foundation of the banking system in India was laid during the British era. Banks were initially set up to serve British interests, primarily to facilitate trades and manage government transactions. The best example of pre-independence era is the Bank of Hindustan, established in 1770. Its headquarters is in Calcutta and it's considered the first bank in India. It stopped operation in 1832 during the financial difficulties. Next, the General Bank of India, which operates in 1786, among the earliest bank but failed within a year. Next, the Presidency Bank. It was established by the British East India Company in the three presidencies, that is Bank of Bengal 1806. First of the three began as the Bank of Calcutta. Next, the Bank of Bombay is in 1840 and third one is the Bank of Madras 1843. These banks were later merged in 1922 to form the Imperial Bank of India. 1921 served as a quasi-central bank before the RBI was established. It played a crucial role in handling government accounts and currency operations. It was considered as the major financial institution in India during that time. Indian Joint Stock Bank emerged in the early 20th century. Example, Punjab National Bank 1894, Bank of India 1906, Central Bank of India 1911, Bank of Baroda 1908. These banks were founded by Indian promoters and focused on serving Indian business and individual. There is the major reason of failure and crisis in these banks are the lack of regulation led to frequent banks failure. Need for central regulation became the evident during that time. Second phase was the post-independence era. The Indian banking sector underwent transformative change after 1947 to better align with national development goals. In 1949, the Banking Regulation Act, which is well known as the RBI Act, was empowered the Reserve Bank of India and it was established in 1935 to regulate and supervise banking sector in India. In 1955, nationalization of the Imperial Bank of India took place and the SBI, that is State Bank of India, became the first nationalized bank of India. Objective of these banks were serve as the principal banking institution for rural and agriculture development. In 1969, nationalization of 14 major private banking sectors has been done to ensure adequate credit to sectors like agriculture, small industries and export. In 1980, nationalization of 6 more banks took place. Total number of public sector banks increased to 20 at that time. In 1991, financial sector reforms, entry of new private sector banks, that is HDFC Bank, ICICI Bank, took place. Liberalization of foreign bank operation has improved the efficiency, innovation and customer services in India. In 2000 onward, technological and structural evolution has took place. Introduction of core banking solution CBC launched by the online and mobile banking system in India. Advancement of digital payment system like UPI and fintech collaboration took place in 2010 and consolidation and mergers like merger of Dena Bank and Vijaya Bank with Bank of Baroda in 2019 can be considered as the major example of Indian banking system. Objective, it helps in the building of a strong, more efficient banking system in India. Major bank nationalization took place like Allahabad Bank, Bank of Baroda, Bank of India, etc. Now in present time, emphasis on financial inclusions, digital banking and global competitiveness has been considered as the major role for adoption of sustainable banking and ESG, environmental social governance. Now the types of commercial bank. Commercial banks are the financial institution that offers a wide range of financial services to individual, business and government. They majorly focus on acceptance deposit, offering loans and providing basic investment product. These are several types of commercial banks which are categorized based on ownership, function, performance and target of the customer. For example, the major commercial banks are considered as public sector bank, private sector bank. The public sector banks are those banks which are majorly owned and operated by the Government of India. The example of public sector banks are SBI, Bank of Baroda and Canara Bank. The purpose of these banks are promote financial inclusion and economic development. Next, the private sector bank is another type of commercial bank which are owned by the private entities or individual. The best example of private sector banks are HDFC, ICICI Bank. They are known for their better customer services, innovation and technological use. The third kind of commercial banks are the foreign banks. The foreign banks are the banks having their headquarter in another country but operate in domestic market. For example, Citibank, HSBC often serve multinational corporation and high net worth client. Next kind of commercial banks are regional rural banks, well known as RRBs. They operate in rural area to promote credit and banking facilities to farmer and rural businesses. They are jointly owned by the central government, state government and a sponsored bank. Example of the RRBs are Prathama UP Gramin Bank. Next are the cooperative banks. Cooperative banks are those banks which are owned and operated by members, that is cooperative society. They serve small businesses, farmers and the rural population of our country. They can be urban or rural cooperative banks. They are very important in the financial inclusion of India. Majorly, they focus on a specific sector and provide services to the rural and urban sector people. Export and Import Bank, they are the another kind of commercial bank known as the Exim Bank, facilitate foreign trade. Small Industrial Development Bank of India, SIDBI, will support small and medium enterprises. NABARD cater to agriculture and rural development. Next, we will explain about the function of commercial bank in India. The main function of commercial banks in India is accepting deposit, saving, current and fixed deposit. They provide loans to the customer, like different kind of loans are provided by the commercial banks like personal loan, business loan, agriculture loan, home loan, educational loan, etc. They helps in credit creation. They provide and receive money from the customer, expanding their role in the economic development of our country. They act as the agent or perform the agency function, collecting checks and bills, payment of taxes, dividend, safe custody of valuable utility function. They provide ATM services to the customer, internet and mobile banking, foreign exchange, credit deposit and issuance of regulation and governance are the major function of all commercial banks in India. The commercial banks in India are regulated by the RBI, known as the Central Bank of India, which provide license, conduct audit and inspection of all these banks. It set SLR rate, CRR and repo rates to all the banks in India. Regulation, interest rates and lending norms are majorly performed by the RBI of India. Thank you so much for joining me for the today's lecture. In the next lecture, we will discuss about the different types of banks in India like public, private and foreign bank. Till then, continuously join us and explore the financial banks and financial system in in India and understand the role played by these banking system in the economic development of India. Thank you.